Hi, thanks for tuning in. This is a weekend review for the stock market for the week ending July 30th, 2021. We're currently looking at a chart of the spiders, which is a proxy for the S&P 500. We've got a lot to talk about this week because we got fresh monthly closes. So let's take a quick high-level view at a bunch of the ETF's indexes, and I'll take you through some of the charts that I'm looking at and some of the setups that I see moving forward for the rest of Q3 and the rest of the summer. It has been a float summer where they've just, low float, low volume, low participation, market grinds higher. I'm not shorting this market. I don't care what anyone says. It's not paying, right? So I'd rather be buying all of these dips into the 40, right? Selling into strength, just buy again, keep compounding instead of, well, let's short here for that little move into the 40, or let's short here for that move into the 40. And try to short here, be wrong, try to short here, be wrong. Oh, we got paid. Boom, immediately all given back. So it's not really, this isn't a market you should be shorted. Second, I also don't think the blue trend line holds again. I think this trend line has been tagged now 7-8 times since the start of the trend. It's a beautiful thing for new traders to learn, right? You hear it all the time, trend is your friend until the very end. But it's a lot harder than it sounds to ride a trend. Each of the times here, right, close below, close below, close below, recapture, close below, close below, close below, right? So the lesson I'm trying to teach here is that one close below a moving average does not change the trend. The slope of this moving average is the trend, right? So the slope is up. The blue line is just our intermediate moving average, SMA 40. The intermediate trend is up. In this chart, all the trends for all the time frames are up on every single chart. Again, why would you short this? What I am looking for, though, is for whenever this ends, whenever this tops, next year, the year after, next month, I don't really care. I'm looking for a period like this, where we will be going sideways and chop for some time. But again, this can continue for years. Even here, 2011 to 2015, it just went straight up, right? So again, not a market to be shorted, right? Buy the dip. Let's do a little bit more technical analysis. Everything I've talked about so far has been pretty high level. Let's dig a little bit deeper, right? PPO on the monthly, still very strong. On the weekly, though, we do have this divergence. We continue to set new highs just on lower momentum. That's not a problem. It's a problem if you're trading options. It's not a problem if you're buying and holding a stock. But again, the 40 and the 50 on the daily equate to the 10 on the weekly. This thing has just been riding the 10-20 the whole time, right? I mean, this is a trend. Ride the trends. They're here. Another market with monster trends, the Qs. Love this market. Similar story though. I mean, weekly PPO bearish divergence couldn't be more obvious. The histogram is showing you that actually there was less momentum this past week than the week before. This is an outside bullish candle on the 19th. It's confirmed by closing above the high of the 368.49. It did not do that. Right, closed 364. So again, this is not a very clean structure right here. The last 4 weeks, it could literally go either way. But when you zoom out to the monthly, PPO bullish, PPO all the way back here at highs not seen before. So the way I look at this is regardless of what happens, this is all just a big wave 3, the highest PPO, the highest volume on the monthly. Validate that. And again, I see this weekly PPO setting up for a dip all the way back down here sometime by October. And then the Qs will rally again, and it will likely align with the tag of this weekly SMA 40. And again, the daily, it does a great job of showing why the risk reward is just not that great for a bull. Again, that doesn't mean sell. It just means it's not there. Like even if it took 2 weeks to go 4%, and we know in the Qs it doesn't take two weeks, right? They'll knock out 4% in a couple days. Even if it took them 3 bars to move that 3%, the downside risk is still negative, right? 6.7%. So that gives you a -2 risk reward. You also see this bearish divergence on momentum on the daily. We've seen this, right, many times before. This is where we're looking for our bounce to come in. And maybe she doesn't break the divergence. Maybe she sets another lower high, and this sets up for some much larger drop. But I just wanted to point out that divergence is still there in the Qs. On the daily, on the weekly, and the monthly PPO is still grinding higher, and this can keep going. Again, a bit extended from the green line, which is the 20, which is the line that she travels. I mean, if you get a chance to buy the Qs at monthly SMA 40, you buy them and you hold them, and that's the trend. That's the high probability bet. Let's take a look at SMH, another awesome ETF to own. I do think this one's a bit less bullish, but again, nothing wrong. Outside bullish reversal candle needs to close above 263.96 this month to confirm. Outside candle means zoom in, and you likely have yourself a broadening formation, and that is what we have here. Another outside candle, an expanding range. I do see another look above and fail setup. So unless they can really get moving, and the PPO has not crossed bullish, right? So I'm not confident that this high here, even if they do set one above 263.86 this week, I'm not confident that's going to lead to increased momentum. Again, I would have loved a tag of the 40 this week. Instead, they gapped and go. I don't know why they're doing that. They could have easily just come down, tagged the 40, got all the demand they needed, filled this gap on the weekly. Fill this gap on the weekly, and give you the best swing trading entry that you could possibly see on this, right? A tag of the 40 and this gap fill. That would be an epic swing trading entry. That's the entry that I'm looking for. But again, PPO going sideways on the monthly, a bit extended from the 20 on the monthly, very close to the 40 on the weekly, and then the daily is definitely showing that, like, every time this thing gets up here, it just finds sellers, and they keep rallying. The bulls keep rallying, but again, there's just so much supply right here. They can't really stop. They have to keep moving, and if they do, it will squeeze these guys that got short. But again, just up to about 270, and then the pullback again. That would likely be the pullback to buy. Sometimes you don't get the setup you want. The way that they did this one, that was very, very tricky. Just to teach you guys again something here very interesting, right? This whole incident here was an expanded correction that came right into the 50% retrace of this wave, and then boom, right into the 1-2, right? And then this one here was just a straight close below the 40 bear trap, right? And then recapture and go, right? Above that high the next day, 255.87, closed at 256.74. But that confirmed it. Again, still trying to get above this, look above and go scenario. First time up here, first retest, second, third retest. I mean, this is like the 4th time. They can definitely go. They don't have to sit around. But just, keep in mind, bearish divergence, right, likely will continue. And at one point, we will come back and tag the 200 on the daily and the 40 on the weekly, and that is where I'm buying Soxel. You just have to be patient. But yeah, the SOXL is the three times directional of that SMH. I will pop into gold. There's a lot of chatter around gold again. You still do have this bullish divergence. You still do have this big old inverse head and shoulders. You still do have an insane amount of supply right here at the $36 level. You now have the 40 sloping down and containing price. I'm not a big fan of this. Now, you get and hold above 36.73, I'll market buy in a second. But again, I'm not a fan of gold. I don't know what else to tell you, right? The 40 is sloping down. This is a problem. And if you look at the monthly, and the PPO is bearish, right? You look at the monthly, bearish PPO. You look at the weekly, bearish PPO, right? The bears are in charge. I'm sorry. And on the daily, it is a bullish divergence, which is nice. You do like to see this, and this is where you could see a big rally from. But again, below the zero line, negative PPO on the daily, and all three of the higher time frame charts, even up to the quarterly, are all bearish. So you just can't trust the bulls. So I'm avoiding IWM, another ETF that I love right now. This one's a bit harder to read. So let's just go to the monthly and zoom in from there. So, obviously you're seeing this PPO curl down now, but again, above all the other highs, this means it's some big wave 3 to me, or, one way to view it would be something like this, the 2000 crash, right? Let's start with just 1, 2, 3, 4, 5, and then an ABC to reset this cycle, right? Boom. And again, right, how much did we retrace? No shit, 50%. All right, so if this is wave 1, wave 2, wave 3 is being confirmed by the highest PPO reading, which is what you need to see. So this could be wave 1 of wave 3. And within this context, right, to give it more, something like that, before a much steeper correction over time that still stays above all of this previous one. And really this thing could launch for a long time. Even if you do something like the balance area rules that I like to look at all the time, you could even say, come up here and say, all right, cool, we've now passed that. You could also look at this as a balance area, right, during the last correction and say, well, we're headed to 320 at minimum. There's a lot of ways that you can symmetrically look at this from a monthly standpoint and conclude that we're going to go a lot higher. That being said, this is the first pullback on the monthly into SMA 10 that is definitely for buying. And I'm not sure if she reached it last month, 207.58. So she did not. So that could still be in the cards again, right? The weekly is still PPO bearish, heading towards zero line. We're almost there, right? We went from 9 to 2. All right, we're getting there. And we tagged a rising, and unlike gold or GDX, like I was just showing you, this blue line is rising towards price, and all of the other lines are going sideways. Is this a rejection or is this a bull flag? I don't really know. No one knows. We need more time. But until above 226.89, the assumption is, this is certainly possible. Just some ending little diagonal within the context of this ABC. Remember, all your C waves are going to be 5-wave moves. So yeah, I don't know. I still have this count in play here. And if you zoom into the daily, one could argue that it's already completed. Right, there's your 5-wave move down. And here is your impulse up, 1, 2. And we're in the midst of the 3 right now that will ultimately take us back to an all-time high. Again, something else I like to talk about is if you turn after hours on, right, this high was made after hours. So your auction ended after hours, and we've never come back to challenge it. So that will at some point get challenged. The question is when. We do have the daily PPO bullish cross. We do have SMA 10 sloping up and price closing above a declining 20 for 2 sessions. We do have the volume at the low, which makes the high of this candle 214.44 an area of interest. Ideally, the bulls would hold this low at 215.38, because if they don't, you certainly could draw something like this. Again, right? So like this unwinding thing. So, you know, no need to guess. I'm still long from here and here. I'm looking to take some off up here. Again, I don't want to be too greedy waiting for 225 when we had 224.50 hit. One way I like to manage this trade is just, you know, for people to recognize that this was the move, right? And so a 50% or a 61% retrace, 221 to 224 is in fact where we should be taking some profit. The 40 up here as well, and your 50% way, you know, of your way to our ultimate profit target up here at 234. And we're using TNA to play this, which is a bit more clear, right? We do have this look below and fail down here with massive volume that came through and did mark the bottom, and we've been up ever since. And you can look at the 50% move here, right? 91.85, we haven't hit it yet. But again, this is kind of the first target I'm looking at, you know, 92 to 94. But ultimately, the look below and fail target, right, which is, you know, when you have a balance area and you come down to the top or the bottom, in this instance, the bottom of the balance area, you pretend like you're breaking down, and you reverse. We've called that a look below and fail, and the target for that at minimum is halfway, right? But ultimately, it's the other end of balance, which is up here. So we are targeting a move to the other end of balance, which again, this auction also ended during after hours, not during regular trading hours. Therefore, has a high probability of coming back and being challenged. When you do see an auction end, you want it to end during regular trading hours. Even like this low down here, for example, it's the same low that you have during the regular day, or if I have non-regular trading hours on, it's the same low down here at 73.41, but that is not true for this high back in March. So just something to keep an eye on. Auctions end during regular trading hours. But again, this is starting to get a little bit corrective. I'll go back to IWM just to be a little bit more clear. A little bit corrective up here, right? So if this is your 1, this is our 2. We're kind of overlapping our 1 again, like rather quickly. And you know, just to be frank, right? A down move followed by an ABC up is generally met with another impulse down. So if this is your 1, something like that, right, could even be in play for a really nasty summer for IWM. And to be frank, it hasn't been a great summer. But again, that being said, monthly reversal candle, dojis for the last 5 months, essentially, all with inside the March candle, which, you know, in hindsight here, it's pretty obvious that was the top. You know, so we're going to know real soon here this week if she continues to ride and captures the 50 or the 40 on the daily, this blue line, you will have a lot more clarity. Failure to get above the 100, which is weekly 20, and this thing's likely toast, right? So it would become, in hindsight, very obvious that we came back, we got rejected at the 20 after closing below it for 2 candles, and now we're going to go back and test SMA 40, which is about 213 this week. So again, I would be a willing buyer at 213, even down to 207. But again, at anything below 207, and you have yourself a big problem. Let's take a look at a couple stocks that are like, you know, definitely monster stocks that keep paying, right? So this is the count that I have here on NVDA. 1, 2, 3, 4, and we're in the fifth wave now. So this thing will not last for much longer. And just, bring up that balance area stuff we were just looking at with IWM. I think NVIDIA is a great chart to show after. Like, look, 2 weeks where they even sliced down to the bottom of balance, held the 40 for 5 weeks. They stayed at the 40 before ultimately launching to a new high, resetting to the 40, and then pushing higher for wave 3 of 5. As you can see, momentum is waning. The momentum for the wave 3 high does track here to the August 31st. And what's unfortunate for the bulls is the high back here in 2016 was higher. So this is looking like the end of the road for NVIDIA. At some point, this will end, right? Yeah, you see the same thing here. Could be wrong, right? Could be wrong, right? Trust a monthly 10. Trust the weekly chart that has been riding a weekly 40 for probably 2 years now. But at some point these things end. That being said, I like this stock a lot here on the daily chart. This PPO pattern has been very reliable to me. She did set a new high back here, so we are looking for her at minimum to come back up, set one more high in price and a lower high in momentum. At this point, I do see an ABC having completed. It could also be a double ABC and something like that's in play. We're going to come down here and fill this gap, and then we're going to march higher, reset PPO all the way to negative, still putting in a higher low relative to -1. Again, I like this chart a lot, but again, riding the 40, and I want to point this out because the next chart we're going to look at is doing the exact same thing and is very important, right? So this whole time you're sitting here waiting for price to come back down to these gaps. She came up this morning 3 or 4% below, and most people got greedy. Other people waited, but she came back to the 40 and held, and that's kind of what I want to point out. ENPH did the exact same thing. Earnings, right? And everyone came in, I had same ABC structure here. Again, people waiting for like a double ABC to come down like that, they never got their chance. So this is a great example of where you can use an ABC into a moving average and then use the moving average to take you out of the trade. At this point, the buy was down here at 150s, 160, and then you just put your stop at 155.25 and accumulate any of these days. Now the problem with that is that it's not regarding for the fundamentals, like i.e. the earnings that took place on 7/28. So just as a trader, I prefer to just wait till after the earnings and then see what they do. This is just as easily could have came all the way back down here, or even back down here for all we know. But we now have the bullish PPO cross on the daily. We are now back above this trend line, which has been providing supply. We are back above this key level here of 185. So that profit target in this gap at 186.46, this gap here at 189.74, like we just closed above all of that supply. So there's only a few people left that are trapped. And what that's going to do is it's going to enable this stock to charge to 208, 200, then 228 in the coming weeks. And this will be the fifth wave, right? So the 1, 2, 3, 4, 5, right? Within the context here of a wave 5. So boom. And then a big correction. I think we're going to get something just like that here. Once she hits this high, she'll pull back like that, just like she did back here after breaking this high. I think the same thing happened. It might even pull all the way up. Either way, ascending channel, dips are for buying. We have earnings behind us. You could just hop on right here next week at EMA 5 on the weekly. I do this all the time. This is how we set our alerts. Let that one retire in a while. I love the PPO here. The monthly, though, is a bit different. And we kind of have just a move straight up from 66 cents to $234, going back four years now. So this one will end too. Again, SMA 10 has been your demand line. So assume it will hold, especially in this configuration and posture, until it doesn't. And this high here in momentum is higher than this high here. So it is, again, it's likely that the bulls will come back up, set another high, and then fail, put in a bearish momentum, just like you had on the cues that I was showing you earlier, before this thing ultimately tops. So again, ENPH, one that I love a lot. NVDA, another one I love a lot. Got to look at Amazon because she had earnings here and definitely is showing a very, very interesting setup. This thing could be done. But, you know, again, it's Amazon. She's never done. Look at this chart. Look at that. I mean, it's just every time she gets to the green line, buy. Every time she gets to the blue line, buy a lot. And we're far from the blue line. So again, this long-term trend is nowhere near being called into question. It's just a monthly look above and fail. It's a year of balance where we have a look above and fail. We now have PPO curling back down on the weekly. We do have a weekly outside bearish reversal candle. But guess what? We're back at the blue line on the weekly. So, you know, again, what has been providing demand this whole time will likely provide demand again. Again, you know, I can't predict the future. I can just give you odds that, you know, when things that trend continue to trend for a lot longer than most people think. That being said, look above and fail targets the other side of balance. So 2871 is now a potential entry. And one thing I do want to point out is this low here, 2871, 2881. Why not 2891? You know, why not? What do I know? But yeah, come on down here, tag the 100 on the weekly, give us this false breakdown, just like we had here. Pop to 4,000. And you know, one's a little bit less known or less popular here is Airbnb. I like Airbnb a lot. It just depends on how you draw this trend line here. You could definitely put it there and say, look, we broke out. We've now back tested. We put in a double bottom here at 130 on the weekly. We now are back above EMA 5 on the weekly, right? You can never go higher without capturing EMA 5 first. So that's a good indicator. But the problem is 150.42, all this supply here, 151.21. Until she can get above that, this thing, you know, is going to be in a downtrend. And if you look, though, no matter how you draw all these trend lines, right? Let's just get rid of all of them. If you just look at the risk reward for this trade, right? Even if she were to just come back up here and put in this beautiful cup and handle, which we see all the time, your reward is 25% and your risk is 8%, right? Because all we're risking is another triple bottom or at least a higher low test. Again, so if you just are to take trades where the risk reward is greater than 2-to-1, and you have an edge, right? More often than not, you will win, and your winners will pay for your losers. So to me, sizing this one at 10 to 20% of your portfolio, risking 7%, which is 0.7 to 1.4 of total portfolio, for a potential reward of 20 to 25%, I think is a pretty good risk reward setup. I also do see this, you know, breakout and targets 156. That's how this works, right? We have a descending channel, which played out perfectly. We got the bear trap on the channel. Boom, other side. We've now broken out, and I don't see why this can't head back to 150 to 154. And the beautiful thing about that is when that happens, I don't see how they can hold this one back much longer. You know, I mean, you can draw all these trend lines however you'd like, connect the highs and the lows. But again, if this is the target right now for this breakout, if they take their time and do it by the end of August, they could certainly break out of this, and even come up to challenge this. But ultimately, 180 is the target. I don't see it getting above this price right here, 173 to 182. So again, you've got great risk reward, and the closer we are to this, the better your risk reward will be. And that's just one way to look at the charts that are in front of you. I will bring up PayPal, which is a nice short. I love these types of shorts. Okay, we've got the bearish PPO divergence. This is now the third high on lower momentum, and immediately the sellers showed up. This is an outside bearish reversal candle, closed below SMA 10. This looks like the start of another weekly correction, PPO bearish cross. You zoom into the daily, and that is definitely an ugly look. We're now below the 40 decisively on volume. This thing is done. It has only one direction to go, something like that, or even even steeper like that. Either way, she's got a date with the 200 at minimum, and possibly even 223. So this is a sell all rallies environment. If you get a rally back to this close, fill this gap. If you get a rally to the 40, so let's just put that in the system right now. All right, if we get that sell alert, that's a great place to buy some puts that expire in October, November. And looking to cover at 250 this trend line, and then maybe even, if you're lucky, 230. So that's a short setup that I have going into next week. I also like Okta. This one's great. Great fundamental company. The product that they provide is awesome. Going to infinity pattern. Right, resetting the PPO while price continues to go higher on the monthly. The weekly PPO just did a bullish cross after resetting to the zero line. I love to see that. The structure here of an ABC, I love to see that after a 5-wave move up. Holding the blue SMA 40 as she consolidates. These are all very, very positive things that you want to see. Zooming into the daily, you start to get this broadening look. I'm not really sure where we are in this count. It is possible that you do have something more like this. Again, we don't really know, so let's just use the moving averages. The 40 is now sloping up, so you are getting an uptrend back. But again, I want to go back to this period here where the moving averages were so far apart at the start of the correction where your risk was highest. Now the moving averages are very close, which is, in my opinion, the end of the correction. But you got to take note that there is a bearish PPO cross on the daily again, and it's possible she could come all the way back down to this 250 level. The obvious thing on the chart for me is this is supply. And until she can capture this, this gap at 256, like this is going to be a problem for the bulls. That being said, it's what will allow us to get ultimately a longer term entry, and this is something that I do believe as maybe the risk reward right now of like that one. So again, not the best. This is an outside bullish reversal candle, right? So was this, and then we went inside. So there's definitely some broadening formation in play on the daily. That's what that indicates. And you obviously see signs of distribution. There's no doubt about that. But again, that's what this stock does, and when she ultimately completes the corrections, and it's very possible this is just some big triangle. But when this does complete, she will get another impulse. And that is the highest probability bet I love this name. I like Okta. Have been trading Okta for a long time, and I will continue to do that. I guess we'll show one or two more here. APA rejection at EMA 5 on the weekly. I don't like this. Again, ABC correction into a rising SMA 40, PPO heading towards a zero line. I like that look. I don't like how price is below a declining 200 on the weekly. I don't like how price is below a declining 200 on the monthly. I do like this PPO on the monthly, and how that ties in with the weekly and daily PPO. And I do like the daily PPO bullish cross that we just got. I do like that SMA 10's curling up. But again, this one is out of time. She's coming all the way back down if she can't get going right away. So I will be looking to take profit in this trade. I was a buyer back here. It's been a nice little, I think at peak was 14%, still up 10% as of Friday's close. So looking to take some profit there and move on to the next trade. Again, we'll leave some behind as long as SMA 40 on the weekly holds. Looking at Twitter, I do like this name a lot. I will continue to buy dips over here. Did take some profit. I don't like this monthly look of a doji, but again, this is a bull flag, bullish PPO. The attack here is a little bit parabolic, so it's entirely possible that this thing remains inside this balance area for a long time. That's definitely possible and digest this supply. So just keep in mind, I was a buyer down here, had to take some off up here at 73 to 68, that whole supply range, and now we're going to be looking for a dip back. And so you zoom into the weekly, you got the PPO bullish cross, you got the PPO bullish cross on the monthly, you have a broadening formation. So you zoom into the daily, right? We definitely see that broadening formation. I would absolutely love if this is what was in store to start the week. Boom, come down, break this low again, tag the 100, tag this 50% retrace of the entire move. That would be awesome. But again, the market will do what the market wants to do. At this point, this PPO bearish configuration is trying to get to zero, but you can see the histogram is telling you that the bears are running out of steam. So a tag of the 40, that's a buy. A tag of the 100, that's a buy. This gap fill at 64, that's a buy. 61.23, that's a buy. And if you zoom out to the weekly, you'll see, yep, the 10, the 20, all of these are buys, and even 59.74 is the best buy, right? So you've got this low here of that candle, which is a bullish reversal candle, the low here of this candle, right? And you can see the volume increasing on the way up, which is what you want to see. So again, Twitter is definitely a name that you want to watch and not lose sight of, as is this one, ADSK. So another breakout in motion, PPO bullish cross, look above and go maybe, look above and fail, could even spark a cup and handle. The monthly PPO bearish cross, right back to bullish cross. That's a trend, right? Buy at the green line, buy at the red line. Again, these are the names that you got to play. Everyone's frustrated with this market, but if you play these names in this video, I promise you're going to be doing just fine. And again, the names that lead tend to lead for a long time. That's how trends work. This does look like a big cup and handle to me. I would love an entry at the 20 or the 40 if aligned with a gap fill. I may not get that. So I'm going to buy any tag of the blue line or the green line. And that's how I'm going to be playing this name. And I do want to buy this name this week or next week. So this is definitely one on my list. We had the buy triggers back here. I didn't take the trade. Of course, that's the one that runs, but that's how this works. We can't predict which trades are going to be the home runs. So you try to take a handful of them every time you get these alerts, and add to the winners and cut the losers, and just keep playing the game. And over time, you will do well. So this video is a bit long. Wow, we're already at 40 minutes. So I'm going to cut it here. I hope you guys enjoyed the content. If you do, like and subscribe to the channel. Check us out on Twitter, and come see you later.